Is there a chance that potentially some dirt to mine at Forrestania before you're going to be getting cream out of Ravensthorpe?
We're working on that. We want to get an MRE out on the stockpiles on the historical gold resources. The stockpiles are pretty straightforward in terms of permits and how we get those into the plant. And then I think Lounge Lizard, which we've already made some market disclosures about, is probably the first cab off the rank if there is one there.
This is general advice and my opinions only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. LEVRD operates as corporate authorised representative 001318377 under AFSL 548573. You can find our financial services guide via the LEVRD website link in the show notes. Righto, bag holders and stop loss owners. I'm doing a bit of a sense check on one of my current holdings here, Medallion Metals, MM8. Mr. Paul Bennett, welcome to LEVRD, mate. Haven't I got some questions for you?
Good morning, Matthew.
Mate, I'd say pretty similar to the Tony O interview I did in terms of the lead-up. Just the stages are at with Medallion now coming from you've had this project the whole time, not the Forrestania stuff, but in the market when trying to find money, trying to keep the lights on, you knew you had a project, but there was no love for your end of town. And I think you were sub 10 cents on the share price. You're sitting at about 40 today. Mate, how's the mental health?
It's actually pretty good, mate.
Sorry, how was it back then?
But back then, it was rough. We released a pre-feasibility study in late 2023, and that's when battery metals were absolutely flying. Our advisors were saying, don't mention development. And so for a bunch of mine builders, that kind of feedback it leaves you wondering what to do next. And that's when we started thinking about, how else can we skin this cat? How do we go under, over or around the capital hurdle and commercialise that deposit at Ravy, which we think has got a huge amount of value. So, in some ways it was a catalyst for us to look at other ways to run the business.
Yeah, mate, I want to talk about Ravy, but I'm very probably more interested, to be honest, in Forrestania. The whole story of Medallion has significantly changed, not since you got Forrestania, more since you closed the deal and the opportunities that Greenstone Belt is going to provide Medallion. We'll start on Ravy. Mate, can you clear up where's everything at the moment? Like you've done your equity raise, you got your Traffy debt. What is left on the permitting front and everything to start digging holes and going underground?
Yeah, so we've got our federal permit, and there's no doubt the mine at Ravensthorpe's critical path here to getting to first production and to positive cash flow. So we have that federal approval. We're seeking an amendment under the existing ministerial statement that we have for the project at Ravensthorpe. So that's under the EP Act here in WA. And so that's done under what they call a Section 45C minor amendment. And then there's the Mine Development and Closure Plan. So we're running that under the Mining Act. All of those submissions have been submitted, so they're advanced. We expect to be in the clear on that front sometime during this quarter, probably at the back end. But as soon as that's cleared up, we commence excavating the box cut.
Exciting. Now the 138 mil Capex, what's the industry like at the moment dealing with EPCs and everything like that with overrun protection, and is the ball in your court a bit more as a mine builder these days, or how's that Capex sensitivity looking?
Yeah, look, we're conscious of it. In terms of contingencies and protections, can I say that it was a conservative study and there's a quality management team in place to manage all of that? That's very true, but I think our situation's somewhat of a unique one as well. So the plant, the TSF, the camp, that's all for the most part built. We are undertaking some modifications and some refurb happening at the Forrestania end, but that's all a relatively straightforward exercise. No doubt it needs careful management, but in my mind, the focus for us really needs to be on the mine. Now, once again, we do benefit from all of that existing mining infrastructure that's at Forrestania from those old nickel mines. So we've got LVs, primary vent fans, electrical kit, pumping kit, refuge chambers, all of that we can transplant down to Ravy, and that's a big tailwind for us in terms of A, managing costs, and B, getting up and running quickly. But to me, it all comes down to executing that underground mine plan, and you'd be well aware of, the risks associated with developing an underground mine plan. So again, that's where all of our focus is at this point in time. We've allowed for a lot of development before we commit to beginning the stoping phase. So I think there's over 4.5 k's of lateral development that goes into the mine before we start mining in that third dimension. So that's, when Tony and I look at this, managing the risks, we've been involved in underground projects before. So that's what we're doing to ameliorate that from the project side at Ravy. But then, to me, the real opportunity here to reduce the funding requirement is looking at introducing new ore sources from the Forrestania end. Now, whether that be stockpiles, whether that be one of the historical resources, perhaps, Lounge Lizard looks quite promising, or even, being a toll treatment option early before the mine's ready. All of those things, I think, can have a really dramatic positive impact on the overall funding requirement of the business. So that's how we're looking at it. That's how we're trying to manage it at this point in time.
Yeah, we may as well go down that road before we close Ravy off, because is there a chance that realistically there's some not walk-up starts but potentially some dirt to mine at Forrestania from some satellite small pit operations before you're going to be getting cream out of Ravensthorpe? Is that a realistic thought or not?
I do think it's realistic. We can't quote the numbers at this point in time, but we're working on that. We want to get an MRE out on the stockpiles on the historical gold resources. So there's 3 historical gold mineral resource estimates in that tenement package that we picked up. So we're working on bringing those up to JORC compliance and getting them into the market. And then what we can do then is start talking about how we introduce those into the mine plan. Now, the stockpiles are pretty straightforward in terms of permits, and how we get those into the plant. And then I think Lounge Lizard, which we've already made some market disclosures about, is probably the first cab off the rank if there is one there.
Speaking of Lounge Lizard, why don't we fire up Canetoad? Let's get this buddy go and see what Benno's talking about. Here we go right here. Here's your Lounge Lizard, the old pit, the step-out holes. We're looking in 3D. We'll spin this around. Have a look at this. Look at this gold for the taking over here. We've got bloody red bloody dots here. Click on it. 7.42 grams. Check out the full bloody drill hole database. We've got a share price. We've got the actual announcement it relates to. What more do you want? As I said, Canetoad is the bloody geological ComSec of the world, and the link is in the show notes for you to get Canetoaded. Anyway, back to Benno. There's funky models out there these days. I assume you're going, there's a tendering process, or like for the underground side at Ravensthorpe, and if you go down the Lounge Lizard Road, there's going to be an open pit one as well. Like what sort of models? Like, you've been around a while in the underground mining industry, and it's evolved a bit. What we're seeing at the moment with these profit shares and different structures on how to operate a mine. Which ones are they all on the table for you, between the owner-operated profit share, straight contractor model for both the open pits and underground? Are you considering all of them?
Look, to get going, I think the contractor model is the way to go for us. I think that model is particularly well suited to getting development done in the outset. You can manage that process. Everyone's aligned, and you can achieve what you want to achieve there. So we'll most likely start under that model at the Ravensthorpe end. The tender process is well advanced. The interested parties have been to site. So, we're moving along in that direction. longer term, I've got an open mind. So when the last time I had a real job on a mine site, it was in a owner operator or a hybrid model for the underground mining. So very comfortable with that. Tony as well is also, we've worked together in those situations as well. So we're open, we've got an open mind to how we manage it longer term. And, maybe at some stage we give our mate, Mark Bowden a call.
He loves being called. It really tickles him up. But what about the open pits like these? And because we see so much of it these days with the likes of Black Cat, et cetera, that do, profit share models, and like it's a lower capital. It's a bit of balance sheet flexibility to start mining these open pits without having to fork up a heap of cash. So if you've got these opportunistic pits, is it a different mindset for the open pit versus the underground at the start?
Yeah, I think so. I think that for us, that would be a contractor option. There's not a lot of open pit mining expertise in the business. It's not our sort of area of expertise. So that's probably the way we go. But having said that, the near-term production opportunity, particularly at Lounge Lizard, it may well be from underground. Now that again, to me, it just looks like you could get in there relatively quickly. You wouldn't need to permit the cutback. And bearing in mind that process plant, we're engineering it for 650,000 tonnes per annum. So we're somewhat constrained. We want to maximise the grade that's going through that facility. So maybe underground is the way that you approach that one.
Now, Ravo, upside extensions, it's not like, 7 years? I think you've got on it at the moment. Is that correct?
Six in the mine plan.
6 in the mine plan. And I know you've spoken about it before, and you can't just be throwing all your money, not throwing your money away at the moment at drilling extensions and everything. But is there, once you do get underground there, is there going to be a bit of an exploration strategy for extensions or new lateral discoveries there? What's the upside at the Ravensthorpe project before we get into Forrestania?
Yeah, well, I mean, broadly, we think we're just scratching the surface of this thing. We've taken a lot of new people into the business recently, and a lot of them with a lot of geological expertise. And a comment was made to me the other day that, we have been defensive in the way that we've drilled this over time. And that's been a function of, mining engineers running the business and a constraint on the capital that we've been able to access, I suppose. So that's a fair enough statement. But what we have done is demonstrate that as we continue to drill it, the resource grows, and then that leads to extensions to the mine plan. So as a very much a base case, I'd expect that as we keep drilling, that mine life gets longer. And I think we've got $37 million allocated in the feasibility study to underground drilling over that mine life. So, yeah, as a base case, I'd expect we replace reserves and that mine life continues to extend. But the upside is if we find a new low. So if there is a new production horizon established off that existing development, then perhaps we can push that mine run rate up to 100,000 ounces per annum. It currently sits at about 80. And there's some evidence that, those opportunities are there. We drilled a couple of holes last year, one into the footwall at Harbour View, one into the footwall at Gem, and both of those came up with new load positions. And we're about to test those there's an 18-kilometre drill program underway at Ravy at the moment. So we're going to get some feedback on those opportunities pretty shortly.
Yeah, exciting. Yeah, how sensitive, and we'll go up to Forrestania via a truck, which is how your dirt is heading up that way. And albeit the benefit you have, there's a pros and cons. It's a bit longer, 170 odd Ks, but you've got high grade, which is, we see a lot of one gram dirt getting trucked these days, but you're trucking 3 to 4. So that's a lot more bang for buck in each tray. Yeah. How sensitive? Thank God you're not mining at the moment with the diesel price. But with that setup, how sensitive do you believe trucking that dirt up is to things like effectively diesel price.
Yeah, right. So, well, if you look at the all-in sustaining cost over the mine life, which is $2,300, about 10% of that is bulk ore haulage.
Yep.
So I'm not sure off the top of my head what the diesel or the fuel cost of running those rigs is, but that's the kind of sensitivity that the business has to changes in trucking costs. More broadly, diesel, we're somewhat shielded from it. I don't think energy more generally, if diesel's up, then energy's probably up across the board in some way, shape or form. But we are on grid power at Forrestania, so that plant is running off the Swiss. So that shields us in some respects. But the mine at Ravy itself is diesel fired in terms of the power plant there. It's got about a 4 meg draw, and then we've got the bulk haulage and the trucking costs as well.
Let's assume unleaded's going to be back at $1.60 by the time you're mining, mate. Let's just run with that for all our benefit.
Yeah. That's my optimistic.
Mate, Forrestania. So I assume, speaking of scratching the surface, I know that you mentioned on the lounge lizard, it was lounge lizard that was, that's the historical database. Where do you start up there? Like how much of the database have you got to work with, and how much work you're going to be putting into the field to find these potential, easy open pit opportunities?
Yeah, I think lounge lizard again. It's the first cab off the rank in terms of where we allocate some capital. So we've got people in the field there at the moment. That asset came to us with a 450 hole data set. We were able to cleanse about 65 of those holes a couple of weeks ago, getting them out in the market. The deposit's drilled over 1 kilometre along strike on a minimum of 25 metre centres, and it gets a bit denser than that where the historical pit was. So there was, I think, about 25,000 ounces mined out of that pit, 4.5 grams back in the mid-90s. And there's been no work done on it since 1999. So there's another 380 odd holes that we'll cleanse shortly. Some of those we can do just by getting GPS coordinates on the collar locations. So there's people out there working on that now. And then we probably have to drill a couple of confirmatory QA/QC holes into that to get a bit more confidence on the assays. And then with that done, we can work towards an MRE update. But while we're doing that drilling, that QA/QC drilling, we'll also put in some extensional holes because there's some structural work going on there, looking at the extensions, particularly at the southern end. So we'll do a bit of everything in that program, and that'll start happening, I think, in the next month or two.
It's easy for someone like me to look at it on the picture and say, look at the size of this tenement area. There's so much opportunity there. But correct me if I'm wrong. Like a biggest struggle and balance within a business when you're trying to manage your cost is like we've got Ravo and we've got Lounge Lizard and we've got a plant refurb. I assume you just can't look at everything at once. It's as much as you'd love to.
Yeah, focus is a topic that I think is on the board's mind. It's on shareholders' minds at the moment. What are we focused on? Where do we need to get to? But the one thing about Lounge Lizard, and this goes for the stockpiles as well, is that if you can introduce that into the mine plan over the short term, then in my view, it really de-risks the business because you're not relying on a single ore source into that processing plant. And we all know that single asset gold development businesses have their challenges. But if we can introduce that second ore source, then I think that ameliorates a lot of risk. And so it's in the interest of the shareholders that we get after that opportunity.
And credit to you for this, the IGO acquisition, just in terms of like the biggest overhang on Medallion was always the copper. But you've found a way to deal with it. I'm going to go buy a copper float plant. Nickel float plant, sorry, and convert it. But considering that now, and considering you're going to have gold only sources of ore potentially coming from Forrestania, and you're going to have gold, copper ore coming up from Medallion, from Ravensthorpe. How is the plant going to be set up to deal with both? Are you going to do them separately, turn a tap off and bypass the float circuit, or is it all going to be blended? What's the strategy there at this stage?
At this stage, base case is that if there was a second ore source from Forrestania, for instance, Lounge Lizard, then it would be batch processed. So the plant itself at the moment, the work GRs are doing, the plant that we'll build there will be a direct analogy for deflector. You've probably heard me make this analogy before. Ravi's a direct analogy for deflector as it relates to the mineralogy and then the process route. So we're replicating that float. So we pull the copper concentrate and some of the precious metals come with that. And then we leach the float tail out the back end to make doré. So that's the focus, that's the base case, but we will have the ability to bypass the float plant and go direct to that CIL plant for the material that doesn't need it.
Yeah. I assume that. I thought that would have been the case. Just wanted to confirm it. Mate, everyone loves a metric, a comparison. This is your chance to say you're currently at a 348 mil market cap. Saying you're going to produce 80,000 ounces. You've got your funding out of the road. What do you think? What do you think of a 348 mil market cap at 43.5 cents at the moment?
Well, I wouldn't be doing my job if I said we were fairly valued. So, yeah, I mean, therein lies the opportunity, right? I think I've made this comparison before, and take it for what it is. But there's some similarities here to. I think Greatland is. We might be a much smaller version of that, but their quarterly yesterday which was an outstanding result. But in terms of gold and copper produced, similar ballpark to what we'll do in a 12-month period under the feasibility study assumptions. And I think they generated $250, $260 million of free cash. So that's kind of what we might, under the, all things being equal, commodity prices and other things, that we generate that sort of cash flow over a 12-month period, and then compare that to our market cap. So maybe that's the opportunity here.
So you're saying about what Greatland got for the quarter is what you're going to put out for one year effectively, and they added 200 mil to the balance sheet.
Yeah, that's exactly right. So obviously that is a step change larger than what we're talking about, and needs to be acknowledged. And there's some slight cost differentials as well, and we've got some work to do. We've got to build a mine, we've got to get that plant right, and we've got to get it up and running. So there's some risk there, but if we're successful in achieving that outcome, then that kind of cash flow generation relative to our market cap on an annualized basis is what I think the opportunity is.
Yeah, look, haven't just been a miner. You gave Billy his first bit of debt up at Paulson's back in your finance days. You've watched markets for years, and now these companies trade over these development periods, and you're talking to everyone that wants to buy and sell your stock. Do you feel that once you start ticking off these little things, is that when the share price takes care of itself a bit? And could be in either direction? Is it, there's nothing you can do at the moment besides execute?
Oh, that's the key thing. Maybe I can get out and market some more or something. There's always something else you can do, but I don't think it's one particular thing. One thing, we are somewhat unique in that where we're located in WA, so we're at the southern end of the Yilgarn, somewhat on the fringes of the wheat belt. So it's a little bit unusual in terms of its location. We've got the copper as well, which is not, there's not a lot of analogies in WA for it. So there are some things there that it's not your standard Eastern Goldfields opportunity. But having said that, we have done a lot of work and we have got a lot of confidence that we can execute. So in some respects, I think it's going to be a bit of a show me story. So once we start hitting these milestones, then eventually the value of the business, if you like, begins to reflect the underlying value of the assets, and then all of the growth opportunities that we've got extending beyond there.
Is your preference to organically grow at Forrestania rather than Ravo and take less reliance on the long haul? Like, is that where a lot of attention's going to be in the future? Is that your easiest win that you feel?
Yeah, I think the most immediate win is to look to push our run rate from 80 to say 100,000 ounces per annum from the opportunities at Forrestania. So that's probably a first step. More broadly, from a strategic point of view, we want to be an 80,000 ounce per annum producer at that run rate in calendar 2027. And then after that, our ambition is really to double that rate of production from the region, and that includes Ravensthorpe as well. So any parts of the Greenstone Belt that we don't already have, we're interested in. We think there's opportunities there. So if at some point in time Forrestania can be self-sufficient in terms of ore sources, then we can consider building the gold and copper flotation capacity back at Ravensthorpe and remove the trucking element. And, the area down there, it's long infrastructure. We can also consider, a standalone development as well. But if you can get Forrestania up and running on its own, then there's the opportunity to bring the process plant back down to Ravi and then have two processing facilities going at either end.
Yeah. What's happening? Lithium price rising is probably not what you wanted to see, but what's happening with Mount Cattlin down there? Like, because there's obviously a lot of infrastructure there. Is that still going? I'm out of the loop with it, to be honest.
Yeah, care and maintenance at the moment. Look, we don't know the owners, but we know the people who are on site. They're our neighbours, and there's some interaction there. So, and they're locals really at Ravi. So we understand that it's on care and maintenance at the moment. But what happens next, I really don't have a clear view on it. But there's an opportunity there too, because that mineralisation, that lithium mineralisation, is in the same rocks as the gold and copper.
Yeah.
And the original gold and copper mine in the Ravensthorpe district was the Mount Cattlin gold and copper mine itself. So there's some opportunities within those mining leases as well.
Yeah. Yeah. Right. Two biggest upside levers, but the two biggest risks as well to your business at the moment, Benno. Give me two each. Let's start with upside, because you get yourself feeling good for the risks.
Yeah. So I think the two upside levers are a resource growth. So the one that's most obvious is at Forrestania. So that second ore source coming into the production profile in the near term, I think that will A, de-risk the business, but B, make the mine go faster and make it go for longer. So that provides some talk to the NPV of the project and the rates of return. The other one is if we are successful in delineating another one of those footwall loads at Ravensthorpe, I think that can also have a big impact on the rate of production out of that mine. So that's something that we're looking at very closely at the moment, and the drills are testing those areas.
Yeah. And risks.
Trucking.
Yeah. What about and I'm interested in it's not the haulage, I guess, the consistency of trucking is, I guess, one thing I consider about the story. I guess what's in place to manage that?
Yeah. So look, it's probably 16 to 18 loads in a 24-hour period, up and back. It's mostly sealed, other than the 35 kilometres at the northern end at Forrestania. We've factored in for road upgrades. We've factored in for road maintenance. We've factored in for 5 days of missing or lost time per month over the mine plan. So fair bit of contingency built in there.
Yeah.
I think that's reasonably well understood and reasonably well covered. Again, introducing that second mine that second ore source into the production profile deals with a lot of that. So that is a risk, a legitimate one. And again, I come back to what I was talking about at the start. It's getting that mine plan in place, up and running per the plan in the feasibility study. To me, that's the key issue, is that we're delivering ore at the rate that we said we would to Forrestania in that time frame. That's where costs can blow out. That's where overall funding requirement can start to get out of control. And that's where the focus really is.
Confident on the met with a bit of a not your standard gold CIL process, but there's deflector to go by, but pretty confident on all the work that's been done there.
Yeah, I know it's an issue for us. The investor community is sceptical about the copper, but there has been a significant amount of met test work done. It's very stable. We're in the fresh. There's a reason we're going into the fresh first and avoiding the trans and the oxide stuff. And that has demonstrated over a lot of test work that it floats a clean, high-value concentrate, and then it's a pretty straightforward leach out the back end to clean up whatever gold and silver is left behind in that tail.
Yeah. Any other criticisms out there that you want to rebut now that you got the microphone, that you sort of have to do, any scuttlebutt that you have to deal with on a regular basis? Or is maybe the copper the main one?
No, I think there's a range of things, but the ones that I think people really do, and I think investors really only need one reason not to go ahead sometimes with an investment, and it's probably those two things. Getting the underground mine up and running at Ravy, and then the met being what we said it was going to be. So, as I said, in some ways it's a show me story, but there's examples of where this works, and there's a lot of test work and studies that we've done to demonstrate that we can get it right.
Yeah. Did you feel vulnerable during the recent downturn from a defence side? Like every stock got hammered. I assume a lot of developers that were, approaching small EVs really that were funded already. Like, or did you think no one's going to try and bloody go hostile on us while all this shit's going on?
Everyone was probably a bit nervous at that point in time, so that would have been my view on balance. But it is something that more broadly, is on my mind. Is that if we don't want this to go cheap through the existing shareholders. There's some of them been there for a long period of time, and it'd be a shame for them to get it pinched.
I'm sure. Are you surprised you've hung on to it this long, considering you were at below 10 cents? So much longer. I remember you saying like it will be a mine. I'm just not sure if we're going to mine it, but it looks like you're going to. Has that been a surprise?
No, it hasn't been a surprise. I mean, it was actually down. It got to 4.8 cents at one stage, and that was in that late period in 2023. But and I always thought, there's a chance that something could happen there, because at that level, the downside's pretty low. And you poke a few holes in at depth at Cundup and come up with something, and they would look like a hero. But, here we are, and the ball's in our court now to deliver. If we get it right, it'll be a tremendous outcome.
Very good, mate. Well, that's been bloody sensational. Thanks for being so open and receptive to all of that. And, mate, anything else you want to close out on? Message to the community.
That's it, mate. It's been a pleasure to catch up again, and let's stay in contact and see how this thing unfolds.
Yeah, mate. I love it. Just splitties of mesh, mate. That's it. As long as it's splitties of mesh, the thing will fly.
You'll get an invite to the mine open.
Mate, for sure. I'll be cameraless. Don't worry. It's all safe. Right, Benno. Best of luck, mate. We're all rooting for you.
Thank you, mate.